The AI trade has powered markets for nearly 2 years now, fueling trillion-dollar valuations and reshaping entire sectors from semiconductors to cloud infrastructure. We hit the streets to get Americans' take on AI and how it affects their lives.
Are you afraid of AI taking your job?
I think AI is coming and it's going to be used in ways that are good, but also possibly ways that are harmful.
I do see where it's being supplemented for things, writing emails, writing proposals and contracts. So I could see other people in my organization where it goes towards it's taking away their statement of work.
We kind of just have to work with technology and use it to better our own business.
I think that it's getting too smart, too quickly. Everybody uses it too much. And I personally don't. I try to minimize my use in general.
Now investors are asking whether we're in the middle of an AI bubble or still just scratching the surface of a long-term growth story. To break down the next leg of the AI trade, we're joined by Dan Ives. He's back with us, Managing Director and Global Head of Technology Research at Wedbush Securities. Gargi Chaudhuri, BlackRock Managing Director and Chief Investment and Portfolio Strategist for the Americas iShares. And Eric Jackson, EMJ Capital Founder, President, and portfolio manager. And guys, something I'm struck by as we heard those folks on the streets of New York, and also I'm sure in all of our conversations, is how concerned normal people are about AI. So there's this fascinating disconnect to me between what we see in the markets, where there is huge investment and enthusiasm, and the real trepidation that people have about how this transition is going to unfold. Gargi, as you all think about your investing strategy around this, how do you think that informs what the transition is going to look like?
Sure, Julie, it's so great to be here. Thank you for having me. And I think just listening to that dialogue and then also thinking about how clients of ours are talking to us about AI. So for example, we just did this survey with People and Money, and 19 million Americans are actually thinking about investing in equity markets in the next year or so.
Who haven't yet,
or many of them have not yet. And a big driver of that is the AI sentiment, this mega trend that is shaping earnings. It's shaping, to your point, a huge amount of earnings growth over the last couple of years. And we think at BlackRock that this is something that is flowing through not just into flows, which is happening, but also into macro data. So it's the macro growth is impacted by earnings. Real GDP in the first half of the year, about 1.1% of that was driven by AI, but also in the micro in terms of earnings, in terms of IG issuance, in terms of how we're thinking about infrastructure and private credit. So this is definitely a powerful force and a tailwind in many ways.
Dan, we know that you are a big AI proponent, obviously, and as you talked about, you think we're sort of still relatively early on in the AI party, so to speak. I'm curious how you're thinking about the investing case for the enterprise versus the consumer when it comes to these AI applications going forward.
I mean, right now it's all about enterprise in terms of the AI revolution. I mean, that continues to be ultimately where the growth is. And I think consumer ultimately is going to come in 2026, 2027. But this is about the enterprise in terms of this AI revolution, from Nvidia to Microsoft to Palantir. This is an enterprise-led AI revolution first, then the consumer.
I think Dan's got to go back to his shot where he had the beautiful trees in the background in Miami. We're having a little bit of trouble with your shot, Dan. But Eric, I want to ask you about Nvidia specifically. I know you've been an Nvidia bull in the past. Obviously, Nvidia has been incredibly dominant in this build-out phase of AI. Do you think that dominance is near peaking as we sort of move towards the application part of AI?
Well, they're gonna. You need both, and so they're in the driver's seat, and they will continue to be for many years to come. I mean, obviously they'll have the AMDs of the world nipping at their heels, and everybody will say, well, we're coming out with the next great chip. But Nvidia has this 25-year head start over everybody, and so they're going to move just as fast, if not faster. And so we've got Rubin coming, and the next generation of chips after that, and there's nobody better positioned than they are to continue to lead. So they are a necessary component. The apps are also a necessary component of what's to come in the build out. So both will succeed.
And I know that you're focused on sort of stocks that are very specific where you see a lot of upside. But do you think that there's also a case to be made for investors? Do you just buy the whole basket of everything that touches AI, or do you think it is better to have sort of these very targeted bets?
Well, I think just as an observer, there's been a lot of skepticism around Nvidia, for example, and so almost from the moment that the ChatGPT 3 came out, 3 years ago now, there was sort of this knee-jerk that, the way to play this is not Nvidia, but it's to play the catch-up trades of like the next set of chips, and that's been terrible advice. And so I think a basket I would not suggest. For most investors, I would say you want to pick the winners within every little niche of the overall AI stack and go with those leaders.
So Dan, I want to go back to you on this then, because we know that you, again, are bullish on quite a number of these different names. Let's say, what if you had to pick one, right? What if you had to pick one stock in 2026 within AI, what's it going to be?
Tesla. Because, this is the AI chapter that's now going in for Tesla. Musk is wartime CEO. Autonomous and robotics is going to be the next step. I think Tesla is ultimately a double over the next 12 to 15 months. That continues to be the name that I think, especially when it comes to a name that investors are underestimating what this is going to look like. To me, it's Tesla, and obviously followed by Messi of AI, Palantir.
Eric, do you have a view on Tesla or Palantir?
I love them both. I think they're both great companies. Alex Karp had an amazing interview just on the network, just in the last half hour. It was riveting to watch. But they're both huge companies, and so like you said before, I like to kind of play for some of the smaller plays. And even a company like Opendoor, you'd think, is that an AI company? But think about like what they are trying to go after, and there are going to be so many stories like this. They're trying to revolutionize how we buy and sell houses, and move away from an agent model to one that's purely like AI led. And so what will that look like? Well, they in the summer, they had 1,400 employees. Keith Rabois, who's now the chairman of the board, has said, we want to fire 90% of those people and replace them with AI. So we want to totally rethink the entire real estate transaction process, AI led, including like home inspections, including like AI, what do they call it when you sort of frame your house, you sort of do up your house and make it look best. That's all staging. Yeah. AI staging now is a huge thing. Huh. So it's going to be interesting. Like that's just real estate, but every industry is going to be revolutionary.
And Julie, I'd also add, the bullishness of colors on this panel. Jackson's dressed a little bad. No, he's dressed a little bearish. I expect
Dan, this is how Canadians dress when they want to look like Dan Ives. This is as flashy as we get up in Canada. Okay,
We've all tried. I think.
We're sort of complimentary here. I think all of us equal Dan shirt is what's going on today. Gargi, I want to follow up to you on something that Eric just talked about, which is those layoffs, right? If there is going to be this disruption, right, and it seems like the more progressed it gets, the more it looks like there is going to be labor disruption. There's also some maybe cyclical labor disruption under the surface. So, okay, we have this great AI future. Who's going to have a job to have money to spend on this great AI future? If I don't have a job, I'm not paying, as Max Levchin was just talking about, I'm not paying an AI agent to buy my groceries or spending that money. So how do you think about that?
Julie, and I think we heard that when we, before our segment started, when we heard from people across the street, if you will, there is that concern around my job is going to get taken away. But if we take a step back and think about where we are from an economic cycle perspective, unemployment rate, at least the starting point, is very, very strong. And I think we have to take solace in the fact that the consumer is in a very good shape right now. Unemployment rate, we haven't had the picture in a while, but based on what we see, it's still a strong labor market. And as of now, the small impacts on the unemployment side is coming through for a very specific cohort. Now, we've seen revolutions like this in the past. I mean, there were people that entered things by hand in stores and in companies, and then you had the computer come in and replace all of that. What happened? People had to get retrained. It took time, and at the end of it, we had a more productive economy. So I don't want to diminish the fears that people have about getting replaced by AI. I do think it's something that you are palpably seeing, but at the same time, I want to point to two things. The research so far shows that if you're using AI to augment your skills, you're likely to be in a much better place than if you weren't using AI at all. So for those that are not using AI, I would say make sure that you're using it for augmentation of your current skills. And the second is be invested in this AI revolution, whether that is through equities, whether that is through private credit, whether that is through infrastructure. Make sure you're a part of this, and then have a voice. Have a voice in the process. There's going to be hopefully regulation around this, making sure that your voice is heard within the process.
Yeah, I love that idea of like hedging that you could potentially lose your job or have to shift your job by investing in some of these AI companies. That's a really intriguing prospect. Going back to some of the specific companies and this sort of universe that we have, I find it intriguing that Dan's picks, or for that matter, Eric's picks, aren't as leveraged to OpenAI, which is seen, obviously you all know there have been a lot of questions about the centrality and circularity of OpenAI and its position in this whole ecosystem. Dan, let me send it to you first, how you think about that, whether you think it's a risk, and what you made of maybe I don't know if it was a Freudian slip or what it was by Sarah Fryer last week of OpenAI, who talked about a potential government backstop, and then sort of the company had to kind of walk that back.
Yeah, and I think they've walked that back, right? Look, I think the reality is like OpenAI is foundational to the AI revolution. And I think everything that they're doing, from the Nvidia stakes to AMD to Oracle, you're building out what essentially is the new economy for consumers and enterprises. So I don't view, look, the circular issue, I'm not as concerned about. It's not like a vendor financing late 90s situation. For every dollar that they invest, they're getting back $12 to $15. So in my view, OpenAI is going to be a core foundational successful piece. I do not worry about the too big to fail concept in terms of where this is all heading.
What about you, Eric?
I think there's been so much noise, and haven't we learned from, especially Tesla and Elon Musk, how many times has the world been sort of offended, at something Elon said? Remember, he said something to Bob Iger. He's in 2018, we thought it was going to end when he tweeted about 420 to taking it private, and the show goes on, and Tesla is the story is what matters to investors. I think, there's people have been complaining about what Sam Altman said on a podcast. It doesn't matter. We were just talking before this segment about using ChatGPT to find like an amazing restaurant in New Orleans that we never would have, discovered before. There's like what we get out of this technology is really what matters, not the personalities, not the
I mean, it matters
news
a
of the
little
day.
bit, but you have other choices. If you don't want to buy Tesla because you think that Elon Musk is not a particularly stable leader of the company, we've been talking about a lot of the other choices that you do have.
I mean, there are always competitors, but like there is no other Tesla. There is no other Elon Musk, faults and all. And there is no other, I think OpenAI is just an amazing company. It's got drama with Sam and Elon fighting and tweeting at each other and stuff, but the product is amazing.
Eric, my call continues to be Julie will be in a robotaxi in 2026. That's my call.
Not a Waymo, a robotaxi?
You're in I think a robotaxi, 2026.
I don't know. We'll see. I don't know about your call that you've made to us before, though, that we'll all have robots in our homes in the next couple of years. I'm not quite ready for that, especially since the robot on the market right now, which is not made by Tesla, still is controlled by a human. No, thank you. Not getting that one in my house. But be that as it may, Gargi, I'm curious how you think about OpenAI and the web that we have seen created here. And also, not just on the equity side, but on the debt side, some of the creative vehicles that we have seen to finance some of these projects.
Absolutely. And this is a question that's been coming up a lot from our clients. I will point out that we just did a poll yesterday in one of our client calls, and 66% of about the 1,400 clients that had joined are still very bullish, but that obviously means that there is a cohort that is getting concerned around valuations, and they're questioning, is AI in a bubble? And a lot of it is around the circular financing point. So maybe two things to remember here. One is, to the extent that the majority, 52% of the hyperscaler capex that's taking place is coming from cash flow and it's not coming from sort of leverage, I think that is something that we can feel good about. And then of the total capex, about only 12% is going towards these smaller neoclouds. To the extent that that remains the case and you're looking at massive profitability, maybe the circular financing, to Dan's point, this isn't new. We've seen it in this space before. It's not as concerning when there is revenue and EBITDA associated at the end. However, obviously, if we look at the number of neoclouds that are doing deals and are doing capex going from 12 to 15 to 50, I think that is going to be something that will raise more questions around circularity of AI. And I'll also say that's probably a risk in terms of, is there a perceived demand that might not actually be there because you're not exactly sure what's hiding what. And that is a risk that we need to be aware of.
Well, Eric, you like some of those neoclouds. We talked about them earlier, Iron, Cypher. CoreWeave, by the way, those shares have been on the wane a little bit. I don't think that's one of the ones that you hold. So how do you figure out, when you're assessing some of these companies, how do you assess the risks, the potential risks that we're talking about?
Use ChatGPT. I mean, you got to do your homework, and you got to. I mean, and we laugh about it, but like, there has never been a better time to be an investor and leverage these AI tools to figure the answers to the questions.
Guess what? Those AI tools are not infallible. The stakes are low when Gargi's asking where she should eat in New Orleans. It's a little bit higher when you're trying to figure out where to put your money.
That's what separates like the good investors from the bad investors. You know, somebody joked with me the other day that like kids today should be majoring in prompt writing. You know, that should be your major. You want to do something practical. How do you write a prompt? It's sort of garbage in, garbage out.
Yeah. And it's the data that you feed it.
Right.
You're getting the output from the data that you're feeding.
Well, most of the data that ChatGPT is using right now is from the internet. So that's data is uneven, shall we say.
Well, and I mean, the good investors know when they're being kind of led. You can smell a rat, like in some of the answers that you get. And so, well, no, I don't trust that. You know, you're wrong, ChatGPT. How about, do it this way and do it that way? It's the follow-ups. And so, I mean, that's the exciting part, though, is that, like, the world is your oyster, I think, with these tools. But you're right. Like there's a big difference, I think, between a CoreWeave and an Iron Cypher. CoreWeave is sort of stuck in the middle between the hyperscalers. They said, like, hey, we want to be this asset light, company because we think it'll get a great, multiple from Wall Street, and then we don't have to buy all the necessary, real estate underneath and build the actual data centers, and that'll be rewarded. Turns out they're getting disrupted because they don't control these things that their whole business is sort of based on.
Right, and then I saw today like Bitfarm, which is a Bitcoin miner, is now transitioning over entirely to AI and data centers, which is something we've seen more and more of. Thank you guys. I wish we had more time.